My name is Richard Coleman. I am 65 years old today. I started my journey in the stock market when I was 42, back in the late 1990s. This was a time when there were no trading apps, no charts, no YouTube, and no social media tips. If you want stock prices, you wait for the newspaper the next morning. If you want to place a trade, you call your broker. And if the market crashed, you found out after it had already happened. You cannot do anything else. I am not so intelligent or talented. It is about patience, time, and delayed gratification. In 1998, I was living in Columbus, Ohio. I was doing reasonably well financially, not rich, not struggling. Money in my bank account, earning barely anything. The interest rate was good, but inflation was quietly eating my money. A colleague casually mentioned, the stock market is where real wealth is created. That line stayed with me. Into the market dreaming of Lamborghinis. I entered with a simple thought. I should at least understand where big money grows. I opened a basic brokerage account and bought my first stocks. A large American manufacturing company, a consumer goods company, and a bank stock. I didn't even know what a valuation truly meant. But the market was rising, and I felt smart. Within a year, I noticed something. Some stocks moved daily. And some people were making money faster than me. That's when impatience entered my mind. I thought, why wait years when money can be made in days? I started short-term trading. I would buy stocks in the morning and sell them in a few days. Sometimes I made money. That small success gave me false confidence. I stopped thinking like an investor. I started thinking like a hunter. The early 2000s, derivatives trading was becoming popular in the US. Leverage sounded magical. You can control large positions with small capital. Nobody explained you can lose everything just as fast. I started trading options and index futures. The early wins were intoxicating. A few $1,000s in profit felt brilliant. I believed I had figured out the market, but the market has a way of humbling arrogance. One bad month turned into three, and three bad months turned into a year. I began overtrading. I increased position size. I ignored stop losses. I tried to recover losses quickly. It was my biggest mistake. By 2002, after the dot-com crash aftermath, I had lost nearly 60% of my trading capital. Not in one trade, not in one day. Slowly and painfully. I didn't tell anyone. I stopped checking statements. Every loss felt personal, and every red number felt like failure. I realized something terrifying. The market does not care how smart you are. Most people quit forever. I didn't quit. But for almost 2 years, I barely touched the market. During that break, I noticed something ironic. Some of the stocks I bought years ago and forgot about, they were still growing. No monitoring, no stress. Still, I earned in those stocks. That's when the truth hit me. The market rewards patience, not cleverness. Then I started reading about Warren Buffett, Peter Lynch, and John Bogle. One common trait stood out in them. They believed in delayed gratification. So I changed my entire approach. No more daily trades, no more leverage. And then I started investing in good stocks, only with long-term vision. Now I see strong businesses only. That should have simple products, stable cash flow, and ethical management. I didn't care about daily price movement anymore. I just don't look at market every day. I began investing monthly, regardless of market conditions. Bull market, I invested. Bear market, I invested more. I stopped asking, how fast can I make money? And I started asking, will this business exist 20 years from now? And just that single question changed everything in my trading career. Time did the heavy lifting. I didn't double money in a year or two. But after 10 years, something magical happened. Money started growing on its own. Compounding became visible. And today, at 65, my total market portfolio is worth over $8.5 million. Not because I was clever, not because I predicted markets, but I stayed invested, avoided shortcuts, controlled my greed, and respected time.
My process is boring, and that's why it works. See, obviously, no one wants to do all the things that I do before entering into a trade.
I look for businesses I understand, products people use daily, low debt, and honest management. Main thing is, if I cannot explain the business to a teenager, I don't invest. See, I don't chase trends. I don't react to headlines. I let time do the work.
The stock market is not a casino. It is not a shortcut to wealth. It is a marathon.
It's the truth that a calm investor will always outperform a clever trader. Those who seek instant gratification lose patience. Those who believe in delayed gratification build legacy. Always remember that time rewards discipline, not excitement.